Hi, this is Joseph. It's Tuesday. It's June 18th, 2013. It's 12:18 p.m. Eastern Time or New York time. And we're going to review one of the trade alerts, the SMS trade alerts, which was on the pound yen. We are looking at the 30-minute time frame. And this particular trade was an HL30 trade. And I have some price indicators on there on the chart there. I'll explain to you what they are in just a minute, but before we move on, I want to explain what the HL30 actually is. Now, when I developed this method, I was using it on a 30-minute time frame. Each one of the strategies that I come up with, I have to give it a name. First of all, when I started to develop each one of these techniques, I would journal and record everything, not only in just written form, but also with video recording. So I needed to give everything a name. So the easiest thing, the most obvious one that came to mind was the fact that I was using it on a 30-minute time frame, and I was looking for the previous day's high and low. That's where I get the HL30. HL, high and low, 30-minute time frame, HL30 technique. So nothing more complicated than that. Now, there are some definite rules that are in place that will determine whether a HL30 signal candle is valid or if it should be discarded, because the HL30 is not a perfect trading system. It's not 100% of the time. Nothing is. And it is something that needs to be managed in the sense that you need to take a look at it, and it doesn't set up at the exact same time every single day. I couldn't even imagine a trading strategy like that. I'm sure that there might be a few that work for a little while like that, but I've never had a trading strategy that produced the same trade at the exact same moment every single day forever. It doesn't work like that. So if you're looking for something like that, this isn't it. And I'm sort of joking here because of course we all know that's not going to work like that. But anyway, so each day with the 5 p.m. Eastern Time or New York time, that rollover period, that's sort of the industry standard that I've always used since I started trading in 2001. And at 5 o'clock, if I'm using a particular chart program that does not indicate that rollover period, I will draw a vertical line and indicating that exact moment when that rollover period is. Now, at that point, what I do is I look back at the previous day's high and low. Now, obviously today's Tuesday, yesterday was Monday, so I'm going to look at Monday's high and low. There's Monday's high, here's Monday's low, right down here. Now, what we're doing is doing a couple of different things. We are taking a look at the high and low, but also incorporating the overall week's high and low if we get an opportunity to see it, because markets and price is going to move. It's going to change. It's going to change the price swings. It's going to change the structure of what it is we see. There's going to be one trade, like the trade that we took yesterday on the pound dollar, I believe. That was also an SMS alert. You can see the video on that one. And it's titled, Why One Trade is Better Than Another Trade. Meaning that we might get two signals on two different currency pairs, but one might look structurally better, for lack of a better word. I mean, it's just going to look more intact. It's going to have more of the rules in place and more of the structure that I need according to my trading system in place. One will have that as opposed to another. Now, there are times when the euro dollar and the pound dollar will give me signals at almost the exact same time and in almost the exact same fashion. Meaning that maybe if I'm trading something like an HL30, it's working off of support or resistance, but not always. So in this instance, what I did was I not only incorporated last week's high and low, but certain price swings, and it gave me the opportunity to determine that this rollover period was also a low. Now you'll notice that this is a low just before the rollover period, but it's not the lowest point of the day. The lowest point of the day is actually over here to the left. But I was using this level here because I could not only identify that it was a low, but that it was a retracement support level. And that's what I was trading off of. So at that point, what I do is I wait for that HL30 or that reversal signal candle. It has to be one of a couple of different reversal candles, either an evening star, morning star, and of course this depends on which direction you're trading it in, a bullish or bearish engulfing candle. And I do use piercing patterns and dark cloud covers, those are a little more advanced in the sense that you can group a couple of different candles together to sort of complete one of these patterns. And you have to have the experience to do that. So basically, I just sort of, if somebody's going to learn how to do this in the very beginning, I suggest just stick with the engulfing candle patterns and the evening star or morning star patterns. They're the easiest to identify. Now, I got an engulfing candle pattern with an entry of approximately 148.73. And when I use this technique, I'm using on this particular pair. So please keep in mind that on this pair, on the pound yen or the euro yen, when I use this HL30, I'm looking for a 40 pip target and a 40 pip stop. When I use this technique on the pound dollar or the euro dollar, I'm using a 20 pip target and a 20 pip stop. So there are some very distinct differences between how to use this strategy based on the currency pair that you're actually choosing to trade that particular moment. Now, you'll notice that this is the stop. I was going long, so here's the stop, and there was a little test, but again, the stops hold. I calculated these trades based on average daily movement, price ranges, and I also calculated them considering the fact that taking into consideration the slow period, or in other words, the time when the market is closed for that particular currency pair, we generally see price move slower or in slower or tighter ranges. There isn't a lot of activity. So these stop losses will hold because I incorporated a lot of that information when I created the system and the targets and the stops. But these targets will repeat all of the time if you do it correctly. So you'll notice that after the pullback and the test of the stop, it hits the first target. I recommend putting on at least 2 lots on a trade like this on the HL30 because you never know when it's going to continue to go on further to its second target. If it reaches the first target, we look for an additional second target of an additional 40 pips. If it was the pound dollar or the euro dollar, we would look for an additional 20 pips, because in that instance with those two currency pairs we're just using 20 pips. So this hit its first target, and then it came back down and would have stopped you out at break even on the second lot, so you would have only earned 40 pips. Now I held on to this trade a little bit differently in the trade copier, and you might see it on the performance that it reads 52 pips, because you can get a little bit more out of some of these trades if you manage them. So again, it didn't reach the second target after the first attempt, but it did ultimately reach the second target after the retracement. So ultimately, you have to take into consideration that this is still inside of consolidation. This is still consolidation from the time the market is open on Sunday. Here's the low, according to this particular chart. Here's the low. So now we've got a new high for the week here. It's also not yet at the previous week's high. You'll notice that. So it still has some room to move around in. Now, taking into consideration all of this that we just discussed, you look here at the dollar index. This is the dollar index. Of course, this is MetaTrader. And you'll notice that this is still inside of consolidation. This is the 1 hour time frame. And I have this range of consolidation, and it has not broken out of this range yet. So we can't really expect a lot of activity here in the currency markets, at least as long as something that's going to be tied to the reaction here in the dollar. Now, I'm not saying that if we get economic data for the UK, that if the dollar stays inside of this range, that the UK is not going to break out. I'm not saying that. I'm just saying that lacking significant economic data that would be sufficient to move some of these currencies out of their ranges and breakouts, if that's missing, then of course we can take a look quickly here at the US dollar and say to ourselves, well, it's still inside of consolidation. We can't expect a whole lot. So be careful as far as how long you hold on to some of these trades. That's what I'm getting at. You just have to take that into consideration. So only take certain pieces of overall moves on days like this.